super traders, and good morning to you all in London. Good morning, Yaron.
Good morning.
How are you?
I'm great.
Yes, you came with a lot of strength after the weekend?
Yes, like the dollar strength.
Like the dollar. What happened during the weekend in the market?
I have to clean my screen in order to see the strength of the US dollar. It's amazing. It's amazing. All the currencies and the gold are dropping versus the US dollar, which is dominating the market right now.
Clean your screen.
I have to clean the screen in order to understand how the market is working now, and the market is so stretched in favor of the US dollar, but we still have some room for further upward movement by the US dollar against all the major currencies. It's going to be a very interesting week.
It is going to be a very interesting week. I would love to hear from you the upcoming opportunities, but first, let's start with the news. Hello, super traders, and welcome to Super Traders TV weekly wrap-up. In the upcoming session, we will summarize the action from last week's US, Asian, and the European markets. Let's begin. Starting with the US market, major US indexes, specifically the S&P 500, began last week's trading week at all-time highs. But this trend slowly lost ground earlier in the week, after private sector prints came in lower than expected. The week finished with a major dip in the S&P 500 after the US job report for February came in much higher than anticipated. This, combined with a decrease in the unemployment rate, raised speculation from the likelihood that the Federal Reserve will raise interest rate as soon as this summer. The US dollar surged to its highest level in 5 years, up 1.4% starting the week at a value of 97.76. Last week's major events in the New York sessions. The Canadian dollar continued its decrease after Canada's market produced a lower than expected week. The loonie dropped 0.8%, capping the week at 0.7922. Moving on to the European market. European stocks rose strongly last Thursday as European Central Bank President Mario Draghi voiced an optimistic tone about the Eurozone. The euro, on the other hand, fell to an 11-year low, dropping 1.64% and finishing the trading week at 1.0847. Last week, major events in the London sessions. Keeping with economists' expectations, the Bank of England decided to maintain the interest rate at their current level of 0.5%. The sterling finished the week sharply lower versus the US dollar. The pound depreciated 2.7% last week, finishing barely above key multi-year lows. The Swiss National Bank's holding of foreign currency increased 2.2% last month, as the Swiss franc depreciated against both the euro and the US dollar. The franc declined 1.1% during last week's trading sessions. Moving on to the Asian market. Asian stocks markets finished the week with gains, as the US employment prints came in positive. The Japanese Nikkei 225 index erased its losses from the beginning of the week, closing with only 0.2% decline. Last week, major events in the Asian sessions. The Chinese market presented economic advance, as the nation's monthly final manufacturing PMI prints came in higher than expected. Due to the positive results from the Chinese market, and as the Australian central banks announced on maintaining the nation's interest rate at 2.25%, the Australian dollar started the week with gains. The currency retreated at the middle of the week as the Australian quarterly GDP prints came in lower than economists expected. The Aussie depreciated 1.2%, starting the week at 0.7712 versus the US dollar. New Zealand's currency also presented a week of losses as the nation's GDP price index depreciated 9% in the past 2 weeks. The Kiwi declined 2.6%, starting the week at the value of 0.7353 versus the US dollar. Going over last week's commodities highlights. Gold prices have dropped 3.7% last week as a stronger US dollar, US economic growth, and weak demand for safe haven assets have all contributed for this decline. This was Super Trader TV weekly wrap-up. Taking a short break. When we come back, we will talk about today's upcoming events and trading opportunities. Stay tuned. Hello, Super Traders, and welcome back to Super Trader TV, New York, London, of course, pre-market session. Every time I'm getting confused. You're on. Right now, we are 22 minutes before the New York, London session is going to start. I would love to hear from you. What are today's upcoming trading opportunities?
Okay, first of all, the trading opportunities as for today are most of the trading opportunities are hidden within the US market, especially the US dollar and the US main indexes. But the market should consolidate around the London session. We are not going to see any strong movement coming into the market before the next catalyst. We know that the market is already stretched. The US dollar is dominating the market after the last NFP print, which came in much better than expected. It was an amazing print. Again, around 300,000 jobs added to the US market, and it presents a very bullish sentiment on the US market, especially on the US dollar itself. But right now, we know that equities are higher return asset class, and now we have risk on theme that is dominating the market. And when we have risk on theme, traders are afraid to take higher risk levels. And having said that, we know that the rate hikes are coming sooner than expected, or the expectations for rate hikes in the US market are much sooner than the previous forecast. It was the previous forecast presented September rate hikes.
They've been talking about 2016 even. I mean, they've been postponing it for a while.
Yes, but now it may be sooner than expected, maybe at the second quarter of 2015.
Wow.
And
this is going to have a major influence on the market, of course.
Of course, it's going to have it's already influencing the market. I don't know if it's the right timing in order to sell the US equities.
When you say equities, you're referring to S&P 500, the Nasdaq 100, the Dow Jones.
Stocks and the main indexes that are combining the main US stocks, or the main indexes are a combination of the best stocks in the market, or the companies or the corporates that are leading the US market.
Okay.
But again, our top 5 tips for today, for this week, and actually we started to, and we are saving the first tip to the US market.
Yes.
As we believe that the US market will collapse in the upcoming weeks, but I'm not sure that this is the right time to take the action. We know that the rate hikes are coming.
We didn't have any announcement by Janet Yellen, for example, the Federal Reserve Chair. We didn't have any announcement by the central bank from the U.S. market. So we don't know if really we're going to see rate hikes sooner than we expected.
Yes, but it depends on the economy measurements. And after such great NFP print, we know that the rate hikes are at the threshold.
I want to take you for a second. Today, major event is going to be in the European market. We're going to have the Eurogroup meetings. This is the day that the European quantitative easing plan is supposed to start. Do you think the quantitative easing is going to cause a recovery in the European market? As we know right now, there is a demise in the European economy. Are we going to see since today an improvement?
Well, I'm not sure. I don't think so. As I mentioned previously, the ECB and the European main banks doesn't have enough money in order to support the current European economic health.
But just last week, the European Central Bank, Mario Draghi, said he's going to start this week 1 trillion quantitative easing plan.
Yes,
so
okay.
This is an announcement without any grounding?
No, of course there is. I don't know if he has a solid basis for this announcement. I really don't know. I don't see where the money will come from. I really don't know. we can take a look at the balance sheet of the ECB, and we can clearly understand that there is not enough money in order to support the European economy as it's structured as of at this point of time.
Okay.
We need an improvement in the industry. We need the improvement in the job data. We need the economic measures to be much better than the previous ones in order to see a real economic growth. It will ECB by itself cannot support the market. So we need to see some more employment. We need to see less corruption. We need to see higher participation in the in jobs, of course, mainly in Greece, in Spain, and some other countries. We need to see the industry and the manufacturing improvements. This is the core information. This is the core or the core basis for improvement in the European economy. I don't see it right now. I don't see how it works. Again, the ECB cannot support the entire Eurozone. And this is why the euro is dropping to 1.8500, and we may see the euro dropping even more to 108, 105 in the upcoming future. We know that the market is already stretched. The US dollar is prevailing, the euro is crashing, and we can see a clear divergence in the economy measurements, and this is why this theme should dominate the market in the upcoming week. Although we are already extended, we are going to see further decline, in my view. We are going to see further decline by the euro against its major counterparts. We will see the US dollar at least consolidating and maybe breaking out to further highs in the upcoming week.
But let's take it to today's opportunities. I want us to focus on the opportunities that we have today, how we're going to trade for today. You mentioned that we're expecting the euro to depreciate, the US dollar to consolidate right now.
I think that we will rest.
We will
the
rest.
market will rest. The market should rest.
Yesterday, after the weekend sharply movement in the markets, we saw everything in red except the US dollar. Everything depreciated except the US dollar. That was the only currency that advanced.
And we can see clear negative correlation between the US dollar and the US equities, which present higher return asset classes. And we are shifting to standard vehicles like bonds or money markets. Traders and US investors pulled out $17 billion from US equities, and they are shifting their money into bonds, into money markets. That means that traders are less likely to invest in high risk equities or instruments, and take the money and put it under a relatively safe investment instruments or vehicles like money markets, like bonds.
But we mentioned that we're not going to trade any of the S&P or the US stocks right now. So what is the asset? Let's mention at least one asset that we're going to trade with today.
Okay, there is no special asset for today. We have to understand the market conditions. Right now, after a very strong movement or very stretched and extensive movement in favor of the US dollar against all other currencies, we will see a quiet market. We have a relatively quiet market news or quiet week with respect to economic data. We will not see a lot of data coming into the market in the upcoming days. We are after the NFP or the major events that shaped the current market situation or the current market sentiment. Right now, we are going to see consolidation, narrow range price action in the upcoming segments. We are going to take the advantage of range strategy. That means that we are going to sell at the top, buy at the bottom. And
use the ladder product, I'm assuming.
Of course, we can use the ladder product. We can use binary option. We can even trade long term, but we have to understand what is the best trades that are hidden in the market right now. There are not so many, but we will choose the best opportunities. I think that gold got slammed in the last few
gold
weeks.
depreciated about, I think, 2% only in a week. This is a
Yes.
major, 3.70, I even think. This is
Yes.
a major movement for the downside. 1 week gold crashed, we can say it actually.
Yeah, the gold is depreciating because of the US dollar strength, and of course this is the right correlation. Usually when the dollar is strengthening, the gold is depreciating, and there is less demand for safe haven assets right now. But at the second quarter of 2015, I'm expecting gold prices to be in much higher price levels. As I told you, I believe that gold should hit 1,300 to 1,400. We are going to look for opportunities during the upcoming week, mainly on gold. And of course, we have the oil.
Crude oil
is working like magic.
It's actually right now consolidating around its lately benchmark $50 per
Correct.
barrel. We can see that its current value 49.66.
It's like magic.
But can we trade crude oil when it's right in the middle, right
No,
in its benchmark?
Of
No,
course
we
not.
can't.
We can buy around between 46 to 48. This is the support level. 52 to 40 to 54 is the resistance level. We are going to play the range. It's a magic range. It's amazing. It is working perfect, and it is the most predictable asset as for now in the market. And that's why I would like to take this asset from the top to the middle. When I'm speaking about the middle, it's the $50 benchmark that we set in in the last few months.
Okay, so right now we're 10 minutes before the market is going to start. I'm going to give you a short break.
Okay.
When we come back, I want to hear assets. I want to know the clear assets that we're focused on today.
We are going to play the range.
We're going to play the range, but still, you're doing it with assets. So right
Correct.
now we're going to take a short break. When we come back, we will continue talking about today's trade opportunities at Super Trader TV London pre-market session. Stay tuned.
Swiss franc versus Great Britain pound.
The British pound is the oldest currency still being used today and one of the most converted currencies worldwide. The Swiss franc has a reputation for being safe haven, also known as a hard currency. It's often purchased during financial crises and in periods of uncertainty because of its stability. The Swiss franc is also commonly used as a global reserve currency. Both the British and the Swiss economies are stable, and both countries have strong financial centers. The British pound versus Swiss franc is considered as a good pairing in terms of stability. As a result, in times when one economy is stronger than another and opportunity occurs, we trade with this pair.
To learn more about assets and how you can use it in your trading activities, watch our live shows at supertradertv.com. Canadian dollar versus Great Britain pound.
The British pound is the fourth most traded currency and the third most reserve held currency worldwide. It is also referred to as the sterling and cable. The Canadian dollar, also referred to as the loonie, is held by a big number of central banks worldwide. It is also known as a commodity currency because of the country's large scale of raw material exports. The British pound versus the Canadian dollar is a popular currency pair that traders often use as an alternative hedging strategy to the US dollar versus the Canadian dollar. The best time to trade this pair would be after contrary results in the two markets, which presents that one market is declining while the other is increasing.
To learn more about assets and how you can use it in your trading activities, watch our live shows at supertradertv.com.
This currency's pair offers interesting possibilities for traders because of its high volatility. These two very different economies show how opposites attract and how differences can be exploited in the world of Forex. When commodities prices rise, the New Zealand dollar value increases as opposed to the Japanese yen. This is because this currency's value is correlated to New Zealand's large amount of natural resources, whereas Japan, which is relatively poor in natural resources, has to import most of its goods. Therefore, New Zealand's Commodity Price Index report, which presents the prices of New Zealand's commodities, would be a great interest to traders. A high reading of the report will cause the New Zealand dollar to increase versus the Japanese yen, while a low reading will cause this pair to decline. To learn more about assets and how you can use them in your trading activities, watch our live shows at supertradertv.com. The Singapore dollar replaced the Malay currency upon its independence from Malaysia in 1965. The US-Singapore Free Trade Agreement, which went into effect in January 1, 2004, was the first US free trade area signed with an Asian nation. Therefore, the most important factor determining the Singapore dollar's strength against the US dollar is the trade balance between the two nations. Both economies import a great deal for one another, and this balance of trade between the two countries greatly affect each currency's value. To learn more about assets and how you can use them in your trading activities, watch our live shows at supertradertv.com.
Platinum. In music, when a record goes platinum, it is always better than if it goes gold. As a commodity, platinum constantly serves as an indicator of the economic times. The price of platinum varies according to supply.
Hello super traders and welcome. Right now we're going to continue and Yaron is going to tell us what are the assets that we're going to focus on today. As we know, just before the weekend we had major movements in the market. Everything depreciated versus the US dollar. Now the market is a bit more cool. We can see that most of the assets are consolidating, but still, Yaron, you told me that we can trade every day. There is every day there are opportunities, and right now I want us to talk about them.
You're pushing me to the corner.
Of course,
I'm digging. I'm speaking.
We are here to talk about opportunities. We are here to trade, and this is what we're going to do. Let's start.
Okay.
What is the first asset?
You're pushing me. Okay, so let's take a look at the market outlook panel and understand what are the best opportunity as for now. You're
preparing yourself?
I'm always preparing myself. I have to stretch up. It's the first morning in the trading week. And
this is true. Okay, but before we're going to talk about the currencies or the assets that we're going to focus on, I would like to tell our viewers, when we're looking at the market outlook panel, what exactly do we see? First of all, I think, correct me if I'm wrong, that the the most important two lines are the weekly change and the relative strength. This is one I'm looking at when we're looking at the market outlook panel. But tell me what you think.
Okay, but this is only the market. This is the part of the actual market activity or the actual movement that's generated from the market participant activity. Traders are buying, traders are selling the assets, and this is the final conclusion or the final print in the market itself. This is the market action.
But teach us, how can we look at this panel and understand what are the assets that we want to focus on?
Okay, first of all, the most important figures for me, or the most important components, are the fundamentals. The fundamentals, or the economic measurements, are the underlying force behind supply and demand of each and every market. So first of all, I'm looking at the fundamentals. I'm looking at the economic
And this is the last row?
This is the last row, right.
Okay.
So basically, I'm looking at the last economic prints. I'm looking at the central bank's dovish or hawkish tone, and I can understand what is the position of each and every market, economy-wise, of course. I have to look at the economy. This is the most important figure, and I will repeat again. This is the basic on the underlying force behind supply and demand of each and every market. And we have to take it into our mind before we are looking at the actual market action. And by looking at the fundamentals versus the market action, we can identify diversion, and we can actually take the action before the market movement, or before the arbitrage will cover itself.
So I'm looking at the fundamentals. Sorry for stopping you, because I'm taking the opportunity to understand exactly what we're looking at. We can see right now, looking at the fundamental momentum rank, that the Swiss franc and the New Zealand markets are the strongest markets right now?
I wouldn't look at the Swiss franc for now. The Swiss franc is a bit different. It's like a mystery for me again. Just like the pound was a few months ago, the strong movement, or the strong shift, 20% just in just 1 minute.
When there was a disconnect from the Swiss National Bank and the European Central Bank.
And actually it disconnected from the market. And now the Swiss franc is pairing all its gains, all its 20% gains in just 1 minute, and it covered all the gains, it paired gains in the last few weeks. So I will not look at the Swiss franc for now.
So how can we lose? Yeah,
I will focus on. I have to focus on the main diversion in the market, and it's between the pound and the euro. The pound is a bit more bullish, and we know that the fundamentals for the pound remain stable. The pound, or the UK economy, is very stable as for now. Actually, we think that the first rate hikes will come from the US market and the UK market. We are going to see in the upcoming year. In the upcoming year, we are expecting only from the UK and the US to rise interest rate, and
because we can clearly say right now that the US and the British market are the strongest markets right now.
Are the most stable economy-wise, of course. So we can see that the pound is bullish, the euro is extremely bearish, and this is the diversion we need to work on. Again, pound is bullish economy-wise, euro is bearish, and there is another component that should be added into this particular asset.
Tell me.
Pound depreciated the most in the last during the last week. We can see minus 0.7 points only in the last week. That was the weekly change of the pound. Right now it's still positive, but it depreciated, although the economy is stable. And this is the best opportunity as for now. We have to trade in favor of pound. Pound is reaching to a very strong support level, psychological support level against the US dollar, around 1.50. It's a significant support level. It's a round number psychology again, 1.50.
So you will trade in favor of the British pound today?
I would like to trade in favor of pound as the economy is stable and the currency performance is negative in the last week, and we have to see a correction. We have to see pickup in the pound activity. And if I would like to trade pound, I would like to trade pound versus relatively weak currency like the euro, like the Japanese yen,
We have an asset. Woo-hoo!
Yeah.
Okay.
Okay.
One asset already
You got me.
came in, was announced. We are going to trade the British pound today versus the euro or even versus the Japanese yen.
Correct.
Okay.
It was very hard to pull it out.
That was, whew, but we did it. Okay.
Okay, we have another one.
Another opportunity.
Yes, sorry.
That's it.
US dollar is very strong. Japanese yen is very weak, and we are expecting another surprise from the Japanese market. We know that we are.
Another surprise?
Yes, we have a dovish tone on the Japanese yen. We know that Kuroda, which is the governor of Bank of Japan.
Thank
Did
you.
Did I say it
Thank
right?
you. Works comes right now. Okay, we can see that works work. Okay.
Okay, so economists, of course, well-informed economists from Japan are expecting another surprise, another stimulus or further measurements in order to help the economic growth in Japan.
But we started to see a recovery by the Japanese market after it entered a recession. We
Yes.
saw that the last GDP prints came in positive.
Correct.
And we saw a strengthen by the Japanese yen. So why all of a sudden we're looking at the Japanese yen and it's weakening?
And this is something that's why I'm expecting a surprise. They will push the economy much stronger in order to and take further steps in order to help the Japanese economic growth, and they are doing the right thing. I think that they are thinking for the long term. If it doesn't matter whether the Japanese market will or the Japanese yen will be strongly slammed during the upcoming months. It doesn't matter. The short term doesn't matter. The long term and the economic health that should be constructive, that should be those are the measurements that central banks should take in order to take a very to help the economy for the long run.
So if we're going to trade the US dollar versus Japanese yen, what is the product we're going to use? Are we going to use it in the short run, long run?
Both.
Both?
Yes, and I will explain why. The Japanese bank is doing a great job, and of course Kuroda and the Prime Minister Shinzo Abe,
yes.
they are stick to their monetary policy tone, and they know what they're doing. Again, they are working for the long term. On the short term, the Japanese yen is extremely bearish. We are going to see price breakout. The US dollar versus Japanese yen is sitting around 121, and we are going to see further movement to the upside in favor of US dollar against the Japanese yen in the upcoming days. We have high volatility measurements. The perfect strategy for high volatility measurement is breakout, and breakout are more likely to succeed under high volatility market conditions. We have those conditions, and I believe that we are going to see US dollar breaking out to further highs versus Japanese yen, and this is the next opportunity. Long term, of course, we are going to take it to the upcoming weeks. In the long term, or in the broader time frame, we are going to see recovery in the Japanese economy, but it is just on a few months ago or half year from now, at least half year from now, we see the improvement, but it's not enough in order to support the Japanese currency.
Okay, so we have two assets, actually three, that we marked from today.
Another one.
We're going to trade, just a second, we're going to trade the British pound versus the Japanese yen and the euro. And as Jeroen mentioned right now, we're going to buy the US dollar versus the Japanese yen. Right now we're 7 minutes in the London session, which means that we're going to take a short break.
Okay.
When we come back, I would love to hear the other assets that we're going to focus on. And of course, we are going to trade. So a few minutes, we'll be back. Stay tuned.
Supply and demand. During times of economic stability and growth, the price of platinum is as much as twice the price of gold. But during times of economic instability, the price of platinum declines as a result of a lesser demand.
To learn more about assets and how you can use it in your trading activities, watch our live shows at supertradertv.com. Euro versus the US dollar.
The euro is the second most traded currency after the US dollar. It is also one of the major reserve currencies in the world. At present, 18 EU member states has adopted the euro as their reserve currency. As the most converted currency internationally, the US dollar is used as the benchmark in the global market. As the major reserve currency, it is held, even if virtually, by every central bank in the world. Euro versus the US dollar, which is by far the most traded currency pair in the world, is affected by how the Eurozone perform against the US market. Therefore, the publishing of the US or the Eurozone GDP report will be an interesting time to exercise the differentials between the two currencies.
To learn more about assets and how you can use it in your trading activities, watch our live shows at supertradertv.com.
The US dollar versus Mexican peso pairing is based on Mexico's trade relations with the United States, which relies mainly on exports from Mexico to its northern neighbor. The peso, which in Spanish means weight, is one of the most liquid market currencies, and when its value rises compared to the US dollar, it is volatile and as a result becomes attractive. To learn more about assets and how you can use them in your trading activities, watch our live shows at supertradertv.com.
The Dow Jones Index.
The Dow Jones Industrial Average, or the Dow Jones, is a stock market index that measures the performance of 30 of the largest publicly traded companies in the United States. It was originally created to provide stock information for firms involved in heavy industry. However, most of the companies listed on the Dow Jones today have very little to do with heavy industry. Some of the listed companies are AT&T, Intel, IBM, McDonald's, and many, many more. To learn more about assets and how you can use them in your trading activities, watch our live shows at supertradertv.com.
The US Dollar Index. The US Dollar Index measures the strength of the US dollar compared to its most popular pairing partners, including the Canadian dollar, Japanese yen, British pound, and the euro. The index was first launched in 1973 and can be traded on the Intercontinental Exchange. To learn more about assets and how you can use it in your trading activities, watch our live shows at supertradertv.com.
Corn. With 270 million metric tons of corn produced in the United States every year, corn is a definite contender as the most significant grain crop on Earth. A deeper look into this crop takes us beyond popcorn and pilgrims. Corn is used for multiple purposes. For instance, dent and flint corn are often used as livestock feed in industrial products. Corn is even used to produce ethanol and is such a remarkably adaptable grain that it is used to feed animals, people, and in the future, maybe even cars. Buying prices fluctuate in accordance with external factors like weather and ethanol production.
To learn more about assets and how you can use it in your trading activities, watch our live shows at supertradertv.com. The German DAX Index.
Hello, super traders.
Hi, super traders. Where were
Hi,
we?
super
Hello
traders.
and welcome to our London session. Right now, we're 13 minutes in the London session, and it is the best time to start to trade.
Did I do it?
Yes,
Right.
you did. I didn't have any marks, so right now,
But you're doing it much better than me.
I have
Your-
such a
your-
strong voice. It's unbelievable.
It's much better than my voice.
It's such a strong voice.
I
right?
bet the viewers like your voice better than mine.
Well, it's not hard. No, I'm kidding. I'm kidding. We said
Thank
that.
you.
No,
I
no.
love you too. Okay.
I'm kidding. We said that we have two assets that we're going to focus on. We're going to trade in favor of the British pound and the US dollar.
Yes, right now we have a great opportunity. We are sitting in a very strong support level, intraday support level in US dollar versus Japanese yen. As I mentioned, we are going to see price breakouts. We have high volatility measurements. This is perfect a component or perfect measurements for breakout strategy. And this is the point where we are sitting at the support level. We are below the average on the short-term time frame in the last few hours, few minutes to few hours time frame. We are below the average, we are oversold, we are undervalued, and this is the point where I would like to trade in favor of the upside or in favor of US dollar versus Japanese yen. We are going to take a short-term position first, binary option, and then we are going to add one more position to the upcoming days.
Okay, exactly. So right now we're going to it step by step. First of all, Yaron mentioned the asset that we're going to focus on, the US dollar versus Japanese yen. As Yaron mentioned as well, we're going to use the binary options.
Correct.
And then choosing the asset.
Correct. US dollar versus Japanese yen. We are expecting a breakout in the upcoming days. Right now we are sitting at the support level. I like to buy at the support levels. I would like to buy in the dip, buying pullbacks. This is another way to approach the strategy. Buying pullbacks, buying support levels, selling at the resistance. That's what I would like to do. And right now we are sitting in a very strong support level, intraday support level. The US dollar is correcting, the Japanese yen is strengthening a bit, and this is perfect for upside or a call position with few hours expiration time.
So looking at the options that we have many expiry options. What is the expiry that we're going to choose?
Okay, because we are sitting in a very strong support level, I believe that we are going to see recovery or upside movement in the upcoming hours. 10 a.m. GMT time is the perfect timing to take this position. By then, I'm expecting that the prices of this asset will be around 120,900 or 121 before a breakout. A breakout should occur only when the market, only around the New York session or around high volatility measurements. We are not expecting in the upcoming hours for high volatility, but later on we are going to see massive movement.
So you know what my next question is going to be. After we chose the expiry, of course, the last step is choosing how much we want to invest in this trade.
Okay, so we are not going to upload our money management system or money management panel because we are trading in a short-term time frame. Usually when we are trading short-term time frame, we are reducing our risk exposure to each and every trade. We are taking the basic investment per trade, or the minimum amount that we are willing to risk, $50 US. This is the minimum amount in our account, which we have the account balance is $50,000. This is the basic amount, and we are investing or risking only $50 US in this case.
Okay, $50 US. This is the amount we're going to invest in this trade. Again, we are trading the US dollar versus Japanese yen. The expiry is going to be 10 a.m. GMT, and we're going to invest $50 in this trade. Again, US dollar versus Japanese yen to the upside.
Correct.
Okay.
Perfect.
As you mentioned, you said we're going to have another opportunity with this asset. We used right now the short term, the binary options product. Are we going to shift for the long term?
Correct, because we in the slow or in the intermediate time frame in my time optimization panel, which means for the next 12 hours to 48 hours, this is the right timing in order to take it further to the upside. Together, combining the high volatility measurements and the breakout strategy and the current market figures and sentiment, I believe that the US dollar will break out to further highs versus Japanese yen, 122, at least 122 or 121, 500. This is the perfect time in order to use the long-term product. We have a lot of opportunities in the long-term product starting from tomorrow to the end of this year, and
let's
I'm
do
going
it.
to
So
take the advantage.
choosing the long-term product, again, as Yaron mentioned, we are keeping the same asset, the US dollar versus Japanese yen, as we see also a long-term opportunity with this asset. Next, of course, step, choosing the asset from the list. And the expiry. We have here different dates, and the question is, what is the best expiry that's going to serve the best for this trade as well?
Okay, on Wednesday, I'm expecting another surprise from
On
the
Wednesday?
Japanese market.
Yes.
We are going to see incoming prints from Japan in the upcoming days, but yet we are not going to see a massive recovery, and that's why we are going to see another further weakness by the Japanese yen against the US dollar, not against all the currencies.
Only against the
Mainly
US
on
dollar.
the US dollar, and that's why we are going to take the advantage this Friday, Friday 13th, again.
Spooky.
The spooky Friday.
Yes, indeed. So
last Friday it was also Friday 13th.
last month there was a Friday 13. Yeah, we've been talking about it, and Bello
we made a
uploaded
fortune.
some creepy images, especially for me, and it was great. So right now, after we're going to shift the subject before anyone is going to have any ideas, we're going to talk about the amount we're going to invest.
Money management system.
Okay, great. Uploading our money management panel. As we know, there are some measures that have to be taken in consider before deciding how much we want to invest in this trade.
Okay, this is our money management panel. Our basic investment per trade for long-term product is $75 US. This is a high probability trade idea, more than 75% success. I'm looking at my time optimization panel. 4 out of my 5 indicators, momentum and trend indicators, suggest that this is the right timing in order to take it to the upside. $150 US, this is the amount that I'm willing to risk in this particular trade.
It's okay, sounds great. So going back to our trading platform, as Yaron mentioned, $150, this is the amount we're going to invest in this trade. Again, we are trading the US dollar versus the Japanese yen, and we're using right now the long term.
Correct.
Okay, so can we have, por favor, our trading platform once again, so we'll be continue to trade? Today we have a shorter session.
Okay.
We're going to have an interesting guest soon, but we will mention it a bit later. Right now, again, US dollar versus Japanese yen, taking this asset to the upside. Okay, Yaron, we have last trade for today. Think about it. What is the last opportunity that you want to focus on?
I want to remind you something.
Okay, please do.
We had the top 5 tips a month ago or a few weeks ago, and we mentioned that the Prime Minister of New Zealand and the Governor of the Royal Reserve Bank of New Zealand
both have been talking about how strong their economy is right now.
Yes, and it's in a great shape. So how come right now we can see a change in the central bank rhetoric? Why? Now it is the central bank backed away from the hawkish tone and shifting to a dovish tone.
I'll tell you why. I have an idea why. Because last week we had a major decline in the nation's GDP price index. And as we know, the GDP price index is the major indicator for the economic strength of the New Zealand's economy strength. 9% depreciation in only 1 week.
You're going to see a correction in the next print, but it's only one print.
Maybe we will, and maybe we'll see a further decline.
But
this is only one print, and you don't think that it's going to have.
But the central
needs
bank,
to have such an influence.
Central banks has to be consistent. and we don't see any consistency in speaking about the New Zealand central bank. And I don't like it, and that's why we didn't buy the declaration by the Prime Minister of New Zealand. We didn't buy it, and we were bearish at first, and when we thought
we became bullish after the
we became
announcement
bullish
by the
because
central bank.
of course, but we just followed the fools. We followed the market action, the market participant sentiment. We took the advantage and we made money, but right now the central bank become bearish, and it is shifting the New Zealand dollar to a bearish bias. And I really don't like these central banks that are not consistent, and they are not keeping the same structure, the same tone, and that's why we didn't buy it at first.
But I need to take you to the bottom line because we need to wrap up. Do you think the central bank announcement is going to present any opportunity to sell the New Zealand dollar today?
Well, today I will focus mainly on range. In our New York session, we are going to trade the range, to trade the ladder product. It's a great opportunity today to trade the ladder product. We have a clear range in the market. We know the direction more or less, and we know the market sentiment, so we can take the advantage and play the range today. And we didn't trade the pound yet, but today we are going to increase our risk exposure in favor of pound, mainly against the euro
and the Japanese yen,
and
of
the
course,
Japanese
as
yen,
we mentioned.
of course, and those are the next opportunity we are going to focus on.
Okay, thank you for today's London session. Thank you as well, Hila. Okay,
Thank
great.
you as well, Hila.
Yeah, I need to teach you some more things, but
you,
it's okay.
You need to teach me how to thank myself.
Oh, thank to myself this one, if you want me to say that. But thank you for joining us in our London session today. We'll be back in 10 minutes with Andrew Sachs from Leap Rate, which brought to us very interesting guests. So see you then in a few minutes. Have a lovely day.
The German DAX Index. The DAX is a German stock index that consists of the 30 biggest blue-chip stocks traded in the Frankfurt Stock Exchange market. A blue-chip stock is generally the market's leader or among the top 3 companies in its sector. This stock index tracks the performance of relatively small selection of the largest German companies according to their market. Due to its small size, it does not fully represent the German economy. The German DAX index is one of the most important indexes in Europe, along with the Euro Stock 50, the French CAC 40, and the British FTSE 100. To learn more about assets and how you can use it in your trading activities, watch our live shows at supertradertv.com.
The US dollar is the currency most frequently used in international transactions. It is also the world's most dominated reserve currency. The Canadian dollar, or the loonie, is the 5th most held reserve currency around the world. The majority of imported oil consumed in the US comes from Canada, so the name of this parent game is oil. For this reason, the US dollar versus the Canadian dollar is very often correlated with the prices of oil. falling oil prices strengthen the US dollar against the Canadian dollar, and the rise of oil prices gives the loonie an advantage on the greenback. To learn more about assets and how you can use them in your trading activities, watch our live shows at supertradertv.com.
Hello, how are you? Great.
The Shanghai
I can't see
Composite
you anyways,
Index.
it's okay.
The Shanghai Composite, or SSE Composite, is a mathematical construct. It was designed to help investors keep tabs on the Shanghai Stock Exchange. The index was launched in July 1991 and tracks the daily price performance of all the SSE A shares and B shares. The index includes companies such as Shanghai International Airport, Air China, Bank of China, and more. To learn more about assets and how you can use it in your trading activities, watch our live shows at supertradertv.com.
With a variety of commodities, natural resources, and farm products, the Australian dollar is highly influenced by global commodity prices. As the demand for commodities increases, so does the demand for the Australian dollar. On the other hand, the Swiss franc is regarded as strong and safe currency as long as Switzerland remains neutral and stable. Therefore, the Australian dollar versus Swiss franc pair can be highly volatile, which makes it an appealing currency pair for traders. To learn more about assets and how you can use them in your trading activities, watch our live shows at supertradertv.com.
Hello.
Australian dollar versus the New Zealand dollar.
The Australian dollar, also known as the Aussie, and the New Zealand dollar, also known as the Kiwi, are similar in many ways. One reason is that both countries have many natural resources. The second reason is that the majority of New Zealand's trade is with Australia. Therefore, any change in the currency exchange rate impact both their economies. For example, New Zealand is one of the world's largest dairy producer. Therefore, every time the New Zealand GDT Global Dairy Trade Report is published, opportunity occurs and we trade with this particular pair.
To learn more about assets and how you can use it in your trading activities, watch our live shows at supertradertv.com. Australian dollar versus yen.
The Australian dollar, or the Aussie, is the fifth most traded currency after the US dollar, euro, yen, and the British pound.
Hello, how are
This
you?
particular pair is often traded as what is called a carry trade. The carry trade is an investing strategy in which the investor borrows money in one country with a low interest rate and invests it in another country with a higher interest rate. This strategy is best used with this particular pair, as a Japanese yen with a 0% interest rate allows traders to receive high yields by purchasing currencies with a high interest rate like the Australian dollar. Therefore, when there are signs that the Australian economy is strengthening and the interest rate might be increased, this is the best time to trade the carry trade.
To learn more about assets and how you can use it in your trading activities, watch our live shows at supertradertv.com. Nikkei 225 Index.
Japan's Nikkei 225 stock average is the leading index among the Japanese stocks. It is a price-weighted index. It includes Japan's top 225 largest companies at the Tokyo Stock Exchange. The Nikkei 225 index was designed to represent the overall Japanese stocks market. The index is equivalent to the American Dow Jones Industrial Average. In fact, between the years 1975 to 1985, it was renamed to the Nikkei Dow Jones Stock Average, and then it was changed back. Its components are reviewed once a year, and it's currently the most widely quoted average of the Japanese equities. To learn more about assets and how you can use them in your trading activities, watch our live shows at supertradertv.com.
Oh, Andrew, you should get a bow tie.
The FTSE 100 Index.
call it in Hebrew papillon.
The FTSE 100 is one of the most popular indexes in the world. It measures the value of 100 of the largest companies traded on the London Stock Exchange. FTSE 100 companies represent about 81% of the entire market capitalization of the London Stock Exchange. However, because most of the companies are international, the index doesn't represent the status of the UK economy. The FTSE 100 index includes companies such as Royal Dutch Shell, British American Tobacco, and more. To learn more about assets and how you can use it in your trading activities, watch our live shows at supertradertv.com.
Sure. Hold on 1 second. 1 second. 1 second.
Great Britain Pound versus Japanese Yen.
The British pound versus Japanese yen pair is based on the volatility this pair creates. This combination presents traders with relatively large price movements compared to other currency pairs, as both the currencies are known for the relatively high volatility. Therefore, after events that presents movements in each of the two economies, this might be an interesting time to trade with this pair.
Then I'll be
To
available.
learn more about
Okay.
assets and how you can use
Where
it
am
in
I?
your trading activities, watch our live shows at supertradertv.com.
Okay.
Russia is one of the world's largest oil producers, producing 10 million barrels of crude oil per day. The United States, on the other hand, is a major oil consumer. Therefore, this currency pair is mainly affected by this natural resource, imports and exports between the two nations, and by government intervention to stabilize the currency, especially on the Russian side. To learn more about assets and how you can use them in your trading activities,
no problem.
watch our live shows at supertradertv.com. Hello and welcome. Today we have Andrew Sachs with us from LeapRate, of course. And Andrew, you brought us a special guest today.
Indeed, I did.
Tell us.
Certainly, the background of this is that this year there's been a really new direction in digital marketing for Forex companies. Website design has been a focus for many companies. And today we're joined by a dear friend of mine, Mordechai Holtz, who is the Chief Executive Officer of Blue Thread Marketing. Hello, Mordechai.
Good morning, Mordechai. How are you?
Morning. Good, I'm great, thank you.
Okay, so I would love to hear from the two of you. What can we say about the current digital marketing?
Absolutely. I mean, currently in the Forex industry, LeapRate predicted last year that there will be a change in website design, that companies will move away from the traditional style of website, which generally had a call to action button. You have a deposit here or click for more information, and there was a reams of information on the website. They're moving away from that. Our predictions were indeed correct. We've seen a few different companies this year move towards dynamic banner presence on the website, much less over-detailed information, a few very important key factors, and very prominent designs, rather emulating those of consultancy firms and international management consultancy, that kind of design of websites. And we've seen an expansion into companies paying a lot of money for unique TLD codes. So you have IG Group last month, a couple of months ago, they bought and they registered successfully generic domain names such as .forex, .trading, things like that. And then you had, prior to that, GMO Click in Japan, who paid $6.8 million to buy one of the only single letter domain names in the world. There are only 3 in the world, and they bought Z.com from Nissan Motor Corporation for $6.8 million. So what I'd really like to ask Mordecai is, who's a real expert in digital marketing in the Forex industry and other industries, what the new direction is for Forex companies to advertise on digital marketing campaigns, bearing in mind the new direction that websites have taken.
Well, like you said, Andrew, there have been changes not only in the Forex industry, but also in the general way people are designing websites over the last, since basically
Andrew,
since
look
beginning
over
of,
there. You see Mordechai as well over there.
Oh, okay. Since the beginning of 2015, really a little bit earlier than that, people have really been changing the design to become much more of a visual and a less of a affiliate kind of style site, because the way people are looking at designs and sites and content is that it's visual first, mobile first, and everything else after that is secondary. So the text plays less of a factor, which in the past it used to be much more text heavy and visuals were a secondary item. Now the trend is, through the last about 8 months, 9 months, people are moving towards the visual first, text second, mobile first. So the text has to be much more fine-tuned and refined and distilled.
Visual becomes everything right now.
Correct, because basically a mobile device limits the amount of content you can read at one time. So the content that has to be there has to be clean, crisp, and to the point right away.
That I agree with, and I think that there's a very good point that Mordecai makes there about the necessity to consider the mobile aspect. You have sites which it's quite an expensive business for companies to develop a website, especially now that the whole dynamic is changing and they're having to redesign their entire site. And bear in mind, they don't alienate existing audience who are used to the traditional style, but they also attract a whole new audience by bringing a new type of website design, and thus those companies that advertise on certain sites and the Forex company that advertises on Forex related sites has to bear in mind where to position itself.
And we know that websites right now are full of advertisers.
They are indeed, and this is now the companies it seems that companies are moving away from that. And Mordecai's right that mobile is something which everyone's looking at. Everyone's got applications for everything on their smartphones. Smartphones are prevalent all over the Far East, all over Asia, all over the North America and Europe. It's all of the major areas where Forex companies are concentrating on smartphone usage is prevalent. And you have to. What I'd like to find out really is, what do you think that the way forward for companies that have a lot of budget to marketing is a very big spend for Forex companies because of the churn of customers and the need to keep looking for new business all the time. So they already have a very high spend. They have to develop a new website. They also have to consider the mobile site. How is it best to combine the new type of website design with the, as you rightly say, less content, much more designed towards targeting, towards that and a mobile site, and still make sure that you're profitable?
So I actually think that it's not necessarily two separate sites. I think one site that is responsive and dynamic in its ability to become adaptable towards whether it's on a computer or on a mobile device would enable a company to promote its content and promote it and use its basically, instead of having to create two separate sites, which would make it a little bit more difficult and expensive, to use one site that's responsive but designed well, and use it that way. They continue to maintain simple and like a very minimal aesthetics kind of style, which is not necessarily the direction that many Forex companies use, because like you mentioned about the heavy need for various advertisers and various promotions and banners, etc. The design for responsive design, which is really the trend moving in the last couple of months and over the last year, has been that people are reducing and stripping down and distilling the amount of unnecessary material because the content gets seen in different devices. That's the first thing I'd say. The second thing is, if they're going to use some sort of application for a mobile device as opposed to just the site. A site could be seen on any device, whether it's a computer, a phone, or iPad or some sort of tablet. If they're going to use an application, then the application should be optimized as well for the user and should be focused on, again, making sure having the user in mind when they're navigating and the user's journey, as opposed to thinking about it from a sales perspective, but rather from the user experience and the user's perspective.
That's definitely I agree with, and I think that so do you think if that's the case that the standardization between mobile and desktop is really because companies are prioritizing the mobile side of the advertising campaigns and the websites and who they're trying to attract as customers? They're prioritizing it through mobile. In fact, as a mobile-led way of working.
But is this enough? Only using, as you mentioned, making it more modern, using more visual than content, is this enough to attract the consumer that, of course, the websites are seeking for?
I don't think it's enough. I'm not saying to eliminate completely the content. What I'm saying is that the visual tells more of a story or more of it becomes more of a driving force to the content that supports it. Not necessarily to ignore it and to eliminate all of the content, but rather to make a stronger impact and to make it more compelling and engaging for the user who is actually using it. As well as Andrew asked a question about directing it towards the kind of reducing the amount of digital, and the website becomes, in many ways, a primary place for people to read and use the content, but at the same time, now more and more people are using the application, whatever the application, whether it's a trading platform, whether it's a information source like it could be even Bloomberg or anything else, they're using the application. So now it becomes more of an opportunity, but also a challenge for a Forex company to find a way to identify and advertise and to utilize the application of a platform for information as opposed to only a website.
That's interesting, actually, because I wonder whether, and Mordecai probably sees this every day, I'm sure, but I wonder whether the imaging and the branding on the application, when you click on that application, if you're a user, whether the imaging of the website, like XNES, which is a Forex brokerage that has really doubled its volume over the last year, was one of the first to really take up this kind of new site. What they have is a yellow and black website, and on it is a very high resolution image.
In the application or in the website? Okay.
And then if you go to all their company information, historic data, it's high resolution infographics and things like that. And I wonder whether retail users, remember that more than they would remember lots of information on a standardized website. And that's becoming
it's a similar kind of idea of using visuals to tell the story over text, because people remember the visual, remember the information, and many companies have moved towards taking their data and their metrics that have otherwise been boring and kind of difficult to understand for the typical user. They've kind of turned it into some sort of infographic or some sort of way to tell their unique story or their unique successes in a visual way, rather than just using this data that otherwise sits in the back for only a few people to read.
Makes sense.
And I think it's more attractive, me as a user, when I'm entering a website and it looks more friendly and the visual looks more prettier even, I'm more attractive to use this website when you have an attack of a content and you don't even know where to start and when it's going to end.
And if it's all standardized and all the same brokers using the same, and the same platform companies, technology companies using the same type of thing. But here's an interesting question. Do you think it's worth companies like GMO Click spending $6.8 million to buy one of the only 3 single letter domain names in the world, as opposed to going down the traditional marketing campaign route and saying this is our marketing effort is that we have got Z.com, which is one of three TLDs, which is only 1 letter in the whole world. You think that's a good future investment, or do you think it's better to work out how to reposition banner campaigns and make them suit the new style of website design?
It's going to be, I think the answer to that is kind of a little bit of both, because there's only 3 companies that can really buy out that kind of single letter domain. It's going to be basically virtually impossible for every one of the Forex companies today to spend that kind of money
that's for sure.
in the long term.
That's for
and
sure.
Secondly, I think that there's more value in the longer term, at least in my opinion, there's more value longer term to not have to to spend that kind of money and to rebrand, because basically by buying that single letter, they're in addition to doing that, they also have to rebrand and reposition themselves in terms of why they decide to go that route, as
Yeah.
opposed to just doing is and spending probably half of that on the existing site and optimizing it towards the user and the information that they have already about what people are reading and consuming on their site. They could have spent probably half of that and still had a much more impact and much more successful conversion rate in terms of the users that they have.
That makes
would be my
sense. That makes sense. Here, I'd like to bring up what I call the Volvo principle.
What is the Volvo
Here's
principle?
the Volvo principle. You have a traditional, loyal customer base. Volvo, very traditional motor manufacturer, who moved into being very modern about 20 years ago. They removed their very staid, old-fashioned, traditional image and wanted to attract a newer customer. And that's because their clients were aging and they were not attracting younger clients. So they needed to bring in new clients, but they also needed to not alienate their very loyal customers, because Volvo is the only motor manufacturer in the world who has a customer base which keeps its vehicle for 20 years. The average length of ownership for a Volvo car is 20 years.
So they needed to do a combination,
That's
the old
right.
and the new.
Exactly, and they did it very, very cleverly. What they did was they retained the traditional values that Volvo customers like, which is safety, high build quality, excellent customer service, reliability, practicality, things like that, and they combined that with high performance, modern design, aluminium and clean, ultra modern interiors, very good quality audio systems, high technology, computerized system, and they combined that, and it worked. So the thing is, I feel that these kind of website designs are at that crossroads right now, where you have the traditional ones, which are all standardized, and therefore traditional customers who are traders who've been trading for a very long time, or partners, IBs that have used their IB portal for a long time, are used to this specific way of working. They're used to going directly into a CRM of a company, or banner advertisers that are they're used to calling their media partner and saying, I need to place this particular banner here for a month. I know the cost of it. I know it's 160 by whatever the dimensions are, 160 here, 320 here. And I'm used to that, and just place the order. So the question is how to keep those people engaged whilst attracting a whole new customer base with the new ultra-modern design without making it so radical that it alienates the existing client base.
Okay. Mordechai, do you have the question?
Yeah, I like Andrew, I like your idea of the Volvo principle, because you're right. Volvo and many automobile companies are going through the same experience because they have such a tradition, almost a legacy of their name and their brand, and Volvo especially because their price point is not necessarily the highest price point. Within the normal region, it's pretty much a moderate price point. Mm-hmm. In answer to your question as a whole, as to how a company uses and makes sure that they are maintaining their existing customer base while it's still at the same time recruiting or acquiring new customers, the answer to that is continue to provide the value that they know is their core mission. Again, additionally, they would have to use is the data that they know that people are continuing to consume. So whether it's the content, whether it's the clothing, whether it's the platform, whatever the product may be in the case of the company, in this case Forex, it should be that the material and the content that people are continuously repeating to use and share and respond to and engage with, that's the material that they should be using. And by segmenting the markets to know which one of the two markets they're trying to attract. So in the case of a younger user, you may be trying to focus on the shiny new widget or shiny new piece of technology that they just launched. But for the more classic user who's been around with them for more than 6 months or whatever it is, they should be focusing on the same piece of content. You just have to reword it or rephrase it to make it relevant to their interest. So
right, so it looks the same. So they're familiar with it, but it has the more relevant content on the
only
wording.
question becomes with Forex is what's considered a long-term user. That's the question.
That's right.
I always ask.
And I will ask you, the both of you, what is considered as a long-term user?
Very, very short in retail Forex.
Right.
Very short.
Yeah, retail Forex is a very high churn rate. So it's that enables a company who does their work and their content and their engagement with their users and their existing users well the opportunity to position themselves as real long-term value for their users, as well as enabling them to increase the longer-term retention of that user. And I think that's where retail forex, general forex as well as a whole, should be doing is focusing on that more. And right now, that's not the case.
Yeah, that's absolutely right. Excellent. Thank you very much, Mordechai. That's excellent, very valuable information, and of course, great to see you.
Likewise. Take care. Have a great day.
Thank you for joining us today, Mordechai. It was a pleasure.
Bye-bye.
Bye.
Andrew, right now we're going to take, I think, a 45 minutes break. When we come back, I heard you have another guest for us today.
Indeed. Joining us in the studio today will be Karin Zalkberg, the Chief Executive Officer of Karinza, which is a company which trains sales teams how to optimize their business model and how to gain the most from their actual investment on sales team as to results. And she specifically concentrates on the electronic trading industry.
Okay, so it's going to be very interesting. We'll be back at 9:45 with Andrew Sachs again with us in our show today. So see you then.